and welcome to the Invested Chartered Accountant. This is my monthly update on where my very small and realistic portfolio, it's not 200,000, it's not 300,000, it is now £2,000, which I'll go into in a moment. I'll take you through what's happened since it's been open. So it's been open for about 8 weeks now. And I'll tell you the highs and mostly lows at the moment of how I've invested into my Trading 212 stocks and shares ISA. So on screen, you'll see my position as it was on my first video. So when I opened up in June, at the end of July, I managed to put in £1,750, and mostly that came from an old investment. So pretty much outside that, there's about a £500 investment, which was pretty much June and July, setting aside £250. And you can see I'd showed a loss last month of £5.05. So a 0.3% decrease on my investment. So it was a pretty bad month in my sort of opening first 4 weeks. So 4 weeks later, and what you can see from my £2,000 investment is I've made a massive 80 pence. Yes, 80 whole pence I've made from a £2,000 investment. So small, it barely registers at all on any rate of return. The differences that I've put through is I've invested another £250 to get to the £2,000 milestone, which should be celebrated. You know, it's £2,000 there, which is quite impressive when you think about it. And over 8 weeks, and it's at 2,000. That's pretty good. Don't expect those to continue. I'm looking to try and secure £250 a month to invest, and if I can find a bit extra through cutting other bills, that's great. But still got bills to pay. So what have I done in August? The difference, as you can see here, is Greg's, which was, if you look at Greg's, I had an investment of 191, has now become 508, and Pets at Home is a new one, and I'll go and explain a little bit about both. The cash value has obviously decreased, and pretty much we've only got 1 month's worth of investment left there, which is just waiting to see what's going to happen. Dividends, no dividends so far, apart from the one I got in the first month of it being open, which was from Vanguard. And the costs you can see under Greg's and Pets at Home, that is the stamp duty. So when you take a net position, when you bake in all the dividends paid under those stocks, and you take away the stamp duty for buying the stock, so it's a sneaky fee, you can see the Invesco is still doing pretty well, the Vanguard's doing well, but the two stocks I've invested in, including Greg's, is not great. Now, I do still have high hopes for both of them. I think they'll turn round, but I'll talk about both in a moment. So against July, at least it's in the black and not in the red anymore. So it's swung around by £5.85, but it's not a great position. But that's because it all changed on the 1st of August. And I'll talk around that in a minute. So that's just the high level where I'm at and the change. Have a look at this. This is I track it by week to see what happens. So you can see OGs is my original investment, and you can see originally I put in 1,500, which is the opening position on the 15th, and you can see the 250 go in on the 6th of July and again on the 1st of August. And you can see from those 8 weeks, the weekly change number is I've had 3 bad weeks out of the 8 where it's declined in value. And just look at the 1st of August. Due to the impact of Donald Trump doing his weird and wacky things over in the States, it has a material impact. And on a small portfolio like mine, you can see it knocked out £28 on a very small portfolio. And pretty much that happened in one day, which was yesterday, which was Friday the 1st. So it went down by 1.39% week on week, leaving me with just an 80p positive. At one point that had gone red, so I'm pleased the market's closed, just leaving a very small profit. But it was a terrible day on Friday the 1st on the stock market. And this is the difference. So the portfolio even value, tongue twister, on the 31st of July, I was almost £25 up. So that was good. And then you can see pretty much a sea of red, with the exception of Greggs, which managed to pull back a little bit. But it was carnage. I was looking at other stocks. It was pretty horrible. And it just wiped it all out. So in one day, you can see it there, pretty much 24 pound wiped out in pretty much from a blink of an eye. It's terrible. And that's what one day can do to any portfolio. You think you're sitting there, you think you can see it growing. It does shrink. You've got to have real resilience when investing in the stock market, where you almost disconnect your emotional ties. You just have to ride the waves, hold your nerve, be confident, because you're going to have days like I did on yesterday, and you just got to accept it and know that you're paying in and investing in good, strong stocks, good, strong ETFs that will recover. And that's where I'm at with all my 4 investments so far. So what next? So Greggs. So you can see my average holding is at £16.95, and it's currently at £15.92. So it's down £1 on every share I own. But you can see from the past year, it's been consigned. It's pretty much at the bottom, and Greggs is a very strong brand. It's got a very strong loyalty. It tends to be quite busy every time I go past it, and even when I go into it, I think Greggs will turn. I look forward to the dividends. It's a good dividend payer, so I will keep taking the dividends. And to be fair, if that price goes down a bit further, I will go in and buy more shares. I'm that confident on Greggs. Pets at Home that I got into, as you can see, it's declined. I got in. They showed in the latest results that they released on Wednesday, Thursday, that the growth is pretty much flatlined, but it's still strong profit numbers. I'm very confident that Pets at Home will turn as well. And once again, a bit like Greggs, I'll take the dividends. And if this price does go lower, I will take my average down and put more money into this. I'm confident at Pets at Home. Now, ones I'm looking, I really want to get into Aviva. Very good dividend, very good company, very strong, very stable. Price is too high at the moment. So you can see it's had a little dip over the last 24 hours because of the carnage that happened. I think there's more carnage. I'm waiting for this to come down, and it's going to be a really solid buy. It's a good dividend payer. I'm waiting for Aviva to get to the right price. You'll see Aviva hopefully appear in my portfolio in the near future. And same with JSK. It's been all over the shop over the past sort of 3-4 weeks. Once again, it's cyclical with GSK. You can see it's ups and downs. I think it might come down a little bit further. It's a good dividend payer. It's a very stable stock. You buy into this one for the long-term dividends is going to kick out. JSK is another one I almost bought. It didn't quite get to the level I want to buy it at, but it came close. But, I do want JSK stock. Legal & General, a bit like Aviva on this one. It's strong, stable, pays a very good dividend, price too high. So I think there's a dividend, premium dividend in its pricing. I need that price to come down, and then I'll buy into L&G. Imperial Brands, very similar. You can see the upward trend on the stock is really strong. It's a very good dividend payer. Price just too high at the moment. I'm waiting for the stock market to come down a bit, and then I'll buy into Imperial Brands. BMM is a bit different. Do I want, after seeing what's happened with Greggs and Pets at Home, another retailer which is currently struggling from a share price perspective? Good dividend payer, got a new CEO, lots of things going on there. Debt worries me a little bit with them. I'm keeping an eye. I think if this one was to push nearer 200 pence, £2, I'd be very, very tempted to go in. Otherwise, I'm quite happy with just investing elsewhere. Lloyds Banking Group, I have this outside my stocks and shares ISA. I'm looking to pull that in at some date in the future. I like Lloyds Banking Group. I think they pay a very good dividend, very strong UK high street bank, very strong balance sheet. And after the Supreme Court ruling that took place, after the business closed on Friday, I think there'll be some more upsides. I didn't buy in just because I didn't know what the Supreme Court was going to, how it was going to rule on the around the cars. I'm once again, if it comes down, I will pay more and get it into this portfolio. At the moment, I'm just watching. It's a watching brief, but Lloyds Banking Group is a very good asset to own. And finally, this was so much better for me as well. The Invesco at the moment, you can see my average is £5.385. I like this ETF. It's been really good. You can see I got in just as it went a spike up and then it took off. It's one of those ones where you don't, if you pay in, you're going to take up your average. I haven't got a problem with that. But at the moment, at £5.66, that's still too high for me personally. I think that will come down. And if it comes down nearer to the value I've put in, then I'm quite happy and really would look to buy quite a few more and pretty much double. I have about just over 100 shares in this at the moment. I'm more than happy to double that if I have the cash available to do that. So it's sort of like my number one priority is to get into this ETF. I think my ETFs at the moment stand about 52% of the portfolio. It really should be 75 and above. So, I really need to push them up. But with the American stock market, it's starting to come down. It might make this more affordable and I'll go into it. But overall, I still look at it and I still sort of go, I've managed to save £2,000 into a stocks and shares ISA. I celebrate that as good news. It's just the way that the market turned yesterday has really dampened down how my current investment looks. I think August is going to be very ropey. I think it could go back into the red quite easily. But if there are the stocks that have gone through and the ETFs that have gone through, if they come available at the right price, I'm more than happy to go in. My target for the end of the year still is looking at around £3,000 to £3,500 if I can get that into here. And that's without factoring any improvements on the investments and any unrealised gains or dividends. Well, let me know what you think. If you want to see more of this, then brilliant. Give me a subscribe or a like. I'll take anything. I'm a new channel. This is only really the second month update. You can see it's only been trading 8 weeks. And any advice or any comments, feel free to pop it in. I'd love to hear from you. So happy investing, and let's hope stability comes through August. And enjoy your summers.